As of right now, Wednesday, April 29, 2026 at 1:59 p.m. IST, the live trading session for Nvidia stock shows a price of $213.17. This represents a downward intraday movement of approximately 1.59% from the previous close of $216.61. While the headline number suggests a cooling period, the underlying reality is far more complex. Most retail investors looking at the Nvidia stock ticker today see a minor retreat and assume the momentum is stalling, but the deeper data reveals that institutional activity is actually picking up in the background. Large-scale orders are flowing through individual brokerage accounts and sophisticated institutional desks, suggesting that the smart money is treating this 1.5% dip not as a sign of weakness, but as a strategic entry point before the next massive demand cycle for Blackwell architecture takes over the narrative. The general expectation among the public is that Nvidia stock has reached a valuation ceiling, with a market cap hovering near $5.3 trillion. People look at the rapid climb over the last year and feel a sense of vertigo, fearing that a correction is overdue. They see competitors like AMD or custom silicon from hyperscalers and believe the moat is shrinking. However, the reality is that the gap between Nvidia and the field is actually widening in ways the average observer misses. It is not just about the chips anymore. It is about the entire stack, from the CUDA software ecosystem to the networking hardware that connects these clusters. While many users on social media or basic investing sites are debating if it is too late to buy, the high-level data shows that sovereign AI projects, entire nations building their own data centers, are just beginning to place their orders. This is a demand profile that simply did not exist 18 months ago. If you look at the daily swings we are seeing right now, the volatility is being driven by a tug-of-war between short-term profit takers and long-term accumulators. On platforms like Robinhood stock trading has seen a surge in fractional shares activity, showing that retail interest remains incredibly high despite the triple-digit stock price. But the real story is in the institutional volume. We are seeing massive blocks of shares moving through Fidelity Brokerage and Interactive Brokers platform. These are not emotional trades. These are calculated position builds by wealth managers who are looking at the fiscal 2027 revenue guidance of $78 billion for the first quarter alone. When you have a company projecting that kind of growth on top of an already massive base, a 1% or 2% daily drop is essentially noise. Speaking of noise, the conversation around online investing often gets bogged down in technical indicators like RSI or MACD. While those have their place, the current momentum in Nvidia stock is being dictated by the Blackwell ramp-up. Earlier this year, Nvidia reported record quarterly revenue of $68.1 billion, which was a 73% increase from the previous year. Most of that was driven by the data center segment, which brought in $62.3 billion. The expectation was that margins might take a hit as they transitioned to new hardware, but the reality was a GAAP gross margin of 75%. That is unheard of for a hardware company of this scale. It shows that Nvidia has total pricing power. They aren't just selling a product, they are selling the only viable ticket to the next industrial age. For those of you managing your own portfolios through tools like Schwab Intelligent Portfolios or a SoFi robo-advisor, it's important to distinguish between a pricey stock and an expensive one. Nvidia might have a high price, but with a PEG ratio sitting around 0.77, it's actually cheaper than many slow-growth utility stocks when you factor in its earnings trajectory. This is why self-investing has become so focused on this one name. Whether you are using the Robinhood app for quick trades or Fidelity Investments for a long-term IRA, Nvidia has become the gravitational center of the modern portfolio. It has effectively replaced the traditional blue chips as the must-own asset for growth. I want to pause here for a second and get your take on the current valuation. Comment below how many shares of Nvidia stock you currently hold in your portfolio and whether you are buying more at these $213 levels or waiting for a deeper pullback. It's always interesting to see how the sentiment on the ground compares to the institutional data we see on the Interactive Brokers trading desk. Now, let's look at what this company actually does for anyone who might be new to the story. At its core, Nvidia designs graphics processing units, or GPUs. Originally, these were just for gamers to play high-end video games. But about a decade ago, the world realized that the way GPUs handle math, performing thousands of tiny calculations simultaneously, was perfect for training artificial intelligence. Today, Nvidia's business is split into four main areas: data center, gaming, professional visualization, and automotive. The data center is the giant in the room, accounting for the vast majority of their profits. They provide the brains for the servers at Google, Microsoft, and Amazon. Their business model is shifting from just selling chips to selling AI factories. They provide the hardware, the software, and the networking to make it all run. In the past, people worried about the lumpiness of their revenue. They remembered the crypto mining crashes where demand would vanish overnight. But the current reality is different because the customers today are the wealthiest corporations and governments on Earth, and they are in a literal arms race. If a company like Meta or Alphabet stops buying Nvidia chips, they risk falling behind in the AI race, which is an existential threat to their business. This creates a sticky demand that previous cycles lacked. Even in their gaming segment, which saw some seasonal moderation recently, they still brought in $3.7 billion in a single quarter. They are dominant in every niche they touch. Looking ahead, the catalysts are clearly defined. We have the Rubin architecture visibility coming in the second half of 2026, which promises even more efficiency. We also have the expansion of agentic AI, where AI doesn't just answer questions but actually performs tasks and runs workflows. Nvidia is positioning itself as the foundational layer for these agents. The risk, of course, remains the geopolitical situation. The US government has placed strict export controls on high-end chips to China. Nvidia has had to navigate this by creating specific chips that meet regulation, but there's always the fear that those rules could tighten further. However, as management pointed out in their latest outlook, they are currently assuming zero data center revenue from China and are still projecting record-breaking growth. That tells you everything you need to know about the strength of demand in the rest of the world. For those using SoFi Active Investing or looking for investment help on various investing sites, the strategy for a stock like this usually involves looking past the intraday fluctuations. The tension between the expectation of a bubble and the reality of triple-digit earnings growth is what creates the opportunity. When the market expects a slowdown and Nvidia delivers a 20% sequential jump in revenue, that's where the big gains are made. We are currently seeing a transition from the build phase of AI to the application phase. As more companies actually start making profit from the AI they've built, they will reinvest that profit into even more compute power. If you're looking at your individual brokerage and wondering if you should diversify, it's worth checking out things like Fidelity ETFs or Fidelity mutual funds that have heavy weightings in the semiconductor space. This allows you to capture the growth of the whole sector while mitigating the risk of a single-day drop in one ticker. But for many, the direct ownership of Nvidia stock remains the preferred path. The company's ability to return $41.1 billion to shareholders in a single year through buybacks and dividends shows a level of financial health that few can match. They have nearly $60 billion left in their buyback authorization, which acts as a massive safety net for the stock price. Every time the price dips significantly, the company itself can step in and buy its own shares, supporting the valuation. To summarize what we are seeing today, the live price of $213.17 is a snapshot of a market that is currently digesting massive gains. The expectation was that the stock might struggle to maintain its trajectory after hitting the $5 trillion mark, but the reality is a company that is still beating earnings estimates and raising guidance. We have moved from a story about potential to a story about proven execution. Whether you are trading on the Robinhood app, managing a sophisticated account on Interactive Brokers, or just starting out with online investing, the key is to stay grounded in the data. The hype is loud, but the balance sheet is louder. The reality of Nvidia's dominance in the AI industrial space remains unchallenged, and until we see a meaningful shift in capital expenditure from the world's largest tech companies, the path of least resistance for this stock continues to be upward over the long term. Stay focused on the product cycles and the institutional volume, as those will be the true indicators of when this cycle finally reaches its peak. For now, the factory of the future is still under construction, and Nvidia owns the only blueprints. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.